Welcome back, viewers. You're watching the Savera and I'm Shefali. The RBI's Monetary Policy Committee has reduced its projection for India's GDP growth in 25-26 by 25 basic points to 6.5% from 6.7% due to global trade and policy uncertainties in the wake of the US tariff hikes, Reserve Bank of India Governor Sanjay Malhotra said today. The RBI governor said, first and foremost, uncertainty in itself deepens growth by affecting investment and spending decisions of businessmen and households. Second, the dent in global growth due to trade frictions will impede domestic growth. Third, higher tariffs will have a negative impact on net worth. However, these are several known unknowns. The impact of relative tariffs, the escalates of our export and import demand, and the policy measures adopted by the government, including the proposed foreign trade agreement with the US, he said.
After a detailed assessment of the evolving macroeconomic and financial conditions and outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. Consequently, the standing deposit facility, the SDF rate, under the liquidity adjustment facility shall stand adjusted to 5.75%, and the marginal standing facility rate or the MSF rate and the bank rate shall stand adjusted to 6.25%.
That quantification of the adverse impacts difficult, he pointed out. Taking all these factors into consideration, real GDP growth for 2025-26 is now projected at 6.5%, with Q1 at 6.1%, Q2 at 6.7%, Q3 at 6.6%, and Q4 at 6.3%, the RBI governor said. He said that while the risks are evenly balanced through these baseline projections, uncertainties remain high in the wake of the recent spike in global volatility. India's real GDP is estimated to grow at 6.5% in 2024-25, on top of a 9.2% growth rate observed in the previous year. In 2025-26, prospects for the agriculture sector remain bright on the back of healthy reservoir levels and robust crop production, Malhotra pointed out. He said that manufacturing activity was showing signs of revival with business expectations remaining robust, while services sector activity continues to be resilient. On the demand side, the bright prospects of the agriculture sector bode well for rural demand, which continues to be healthy, while urban consumption is gradually picking up with an uptick in the discretionary spending. Investment activity has gained traction and is expected to improve further on the back of the sustained higher capacity utilization. Governors' continues thrust on infrastructure spending, healthy balance sheets of banks and corporates, along with the easing of financial conditions. Merchandise exports will be weighed down by global uncertainties, while services exports are expected to remain resilient. Headwinds from the global trade disruption continue to pose downward risks, Malhotra added. That was all for now on today's update of RBI's monetary updates. Stay tuned with the Savera. Download the Savera app. Follow us on Facebook, Instagram, Twitter, and YouTube.